Welcome to. Today we're diving into these companies are shaping the future of innovation, technology, and stability in volatile markets. Whether you're a seasoned investor or just getting started, this list offers a mix of growth, value, and income opportunities. Let's explore. Our first pick is Tesla, ticker symbol TSLA. Now you might be thinking, Tesla, isn't that stock crazy expensive? And yeah, it's had its ups and downs, but hear me out. Tesla has solidified its dominance in the electric vehicle market and continues to expand its clean energy ecosystem. We're not just talking cars here, people, we're talking solar panels, battery storage, the whole shebang. Let's look at the numbers. Revenue growth year-over-year 9%, gross margin 17.9%, free cash flow $4.2 billion. Those are some serious numbers, especially that free cash flow. Tesla's sitting on a mountain of cash, which means they've got the resources to keep innovating and stay ahead of the curve. Tesla's gigafactories are like something out of a sci-fi movie, and they're pumping out cars at an insane rate. This is key because it allows them to keep costs down and deliver cars faster than their competitors. Plus, their focus on full self-driving technology, that's a game changer. With the recent launch of the Cybertruck, Tesla is tapping into an entirely new market segment. I mean, have you seen this thing? It's like something out of Blade Runner. People are already putting down thousands of dollars to reserve theirs, and it hasn't even hit the streets yet. That's brand loyalty, my friends. But here's the thing about Tesla, and why I'm so bullish on them. They're not just an EV company, they're a technology company, a clean energy company, a lifestyle brand. They're leading the charge towards a sustainable future, and that's something I can get behind. Now I know what you're thinking, Tesla's price-to-earnings ratio is sky high. And you're right, it is. But here's the thing about growth stocks. You're paying for future potential, not just current earnings. And Tesla's potential is off the charts. Think about it, the EV market is only going to get bigger. Governments around the world are pushing for cleaner energy, and consumers are demanding more sustainable options. Tesla is perfectly positioned to capitalize on this trend. Plus, with Elon Musk at the helm, you know you're in for a wild ride. Love him or hate him, you can't deny that the man's a visionary. He's not afraid to take risks, to push the boundaries of what's possible. So, is Tesla a risky investment? Sure, it can be volatile, but for those who believe in the long-term vision, Tesla is a stock you want to have in your portfolio. And let's not forget, Tesla is constantly innovating. From their energy products to their cutting-edge technology, they are always pushing the envelope. Their AI Day events showcase some of the most advanced technology in the industry, proving that Tesla is not just about cars, but about creating a smarter, more efficient future. And their community impact? Tesla is making strides in local communities, creating jobs, and promoting sustainable practices. With a global presence, Tesla is not just an American success story, it's a worldwide phenomenon. Looking ahead, Tesla's roadmap is filled with exciting projects and innovations that promise to keep them at the forefront of the industry. Their commitment to sustainability and reducing carbon footprints is not just a business strategy, it's a mission that resonates with millions. Tesla's partnerships and collaborations with other companies further solidify their position as a leader in the clean energy space. Their influence on the automotive industry is undeniable, and their role in shaping the future of transportation and energy is just beginning. So if you're looking for a company that's not afraid to innovate, to take risks, and to lead the charge towards a better future, Tesla is the one to watch. With their impressive stock performance and growth potential, Tesla is a compelling choice for any forward-thinking investor. Their vision for the future is clear, and their long-term goals are ambitious but achievable. Tesla's impact on the world is already significant, and their legacy is only just beginning to unfold. From their humble beginnings to their current status as a global powerhouse, Tesla's journey is a testament to what can be achieved with vision, innovation, and determination. The future is bright for Tesla, and their potential is limitless. So keep an eye on this company because they're just getting started. Second on our list is the tech giant, ticker symbol AAPL. We all know Apple, right? iPhones, Macs, those white earbuds everyone used to have. But Apple is more than just gadgets. They've created an entire ecosystem, and that's what makes them such a powerhouse. Think about it. When you buy an iPhone, you're not just buying a phone, you're buying into the App Store, Apple Music, iCloud, the whole 9 yards. And once you're in the Apple ecosystem, it's hard to leave. And the numbers don't lie. Check it out. Operating margin 30.1%, cash on hand $162.1 billion, revenue growth year over year 2.1%. That operating margin, that's insane. It means Apple is incredibly profitable on every dollar of revenue. And that cash on hand? We're talking more money than some small countries have. That gives Apple the flexibility to make big moves, whether it's acquiring other companies, investing in research and development, or returning money to shareholders through buybacks and dividends. But Apple's not just resting on its laurels. They're constantly innovating, pushing the boundaries of what's possible. They're investing heavily in artificial intelligence, augmented reality, and other cutting-edge technologies. And let's not forget about their services business. Apple Music, Apple TV+, iCloud, the App Store, these are all recurring revenue streams that are growing at a rapid pace. In fact, services now account for a significant portion of Apple's overall revenue. So, what does all this mean for investors? It means Apple is a solid, reliable investment. They've got a proven track record of growth and profitability, a fortress balance sheet, and a commitment to innovation. Now, Apple's not going to make you rich overnight, but it's a stock you can buy and hold for the long term, a stock that can provide stability and growth to your portfolio. And with every new product launch, Apple continues to capture the imagination of consumers worldwide. Their global presence ensures that they remain a dominant force in the tech industry. Plus, their commitment to sustainability and renewable energy projects shows they are thinking about the future. And let's not forget their community programs and educational initiatives, which further solidify their brand loyalty. From iPhones to Macs to wearables, Apple's diverse product lineup ensures they cater to a wide range of consumers. And with their continuous investment in future technologies, Apple is set to remain at the forefront of innovation for years to come. Next up is Boeing, ticker symbol BA, a name synonymous with aviation excellence. Now I know what you're thinking. Boeing, haven't they had some trouble lately? And yeah, it's been a bumpy ride for them, no doubt. The turbulence in their journey has been significant, but Boeing is a giant in the aerospace industry, and they're on the comeback trail, ready to soar to new heights. Let's not sugarcoat it. The past few years have been tough for Boeing. The challenges have been numerous and daunting. The 737 MAX grounding hit them hard, and the pandemic decimated air travel, bringing the industry to a standstill. But Boeing has weathered the storm, they've learned from their mistakes, and they're emerging stronger than ever with renewed vigor and determination. Here are the key metrics. Operating margin 4.8%, a sign of their operational efficiency. Free cash flow, $3.1 billion, a crucial indicator of their financial health. Defense contract portfolio, $28 billion, a testament to their strong foothold in the defense sector. That free cash flow is crucial because it shows that Boeing is generating cash, which is vital for their long-term sustainability, which they can use to pay down debt, invest in new products, and return value to shareholders, ensuring a balanced approach to growth. And let's talk about that defense contract portfolio for a second. It's a cornerstone of their business strategy, $28 billion. That's a huge safety net for Boeing, providing stability in uncertain times. Even if the commercial aviation market takes a hit, they've got a steady stream of revenue coming in from the defense side of their business. This diversification is key to their resilience, ensuring they can weather any storm. But here's the thing, the commercial aviation market is recovering. The skies are getting busier, people are flying again, airlines are placing new orders, and Boeing is ramping up production to meet this renewed demand. They've got a massive backlog of over 4,500 commercial aircraft orders, which provides revenue visibility for years to come. This backlog is a clear indicator of the trust and confidence the market has in Boeing's future. And let's not forget about Boeing's commitment to innovation. They're not just resting on their laurels. They're investing heavily in new technologies, like sustainable aviation fuels, which are crucial for the future of green aviation. Autonomous flight and advanced manufacturing techniques are also on their radar, pushing the boundaries of what's possible. Boeing is not just building airplanes, they're shaping the future of air travel, setting new standards for the industry. With their eyes set on the horizon, Boeing is poised to lead the aerospace industry into a new era of innovation and excellence. Fourth on our list is Toyota Motor Corporation, ticker symbol TM. Now you might be thinking, Toyota? Isn't that like my grandpa's car company? And yeah, Toyota has a reputation for building reliable, practical cars. But don't let that fool you. Toyota is a global powerhouse and they're not afraid to innovate. Let's start with the basics. Toyota is the world's largest automaker by volume. They sell millions of cars every year all over the world, and they're not just building gas guzzlers anymore. Toyota has been a leader in hybrid technology for years, and they're now making a big push into electric vehicles. Here are the key highlights. P/E ratio 9 times. Operating margin 8.9%, annual production 10.5 million vehicles. That P/E ratio is important because it tells you that Toyota is a value stock. They're not as flashy as some of the other companies on this list, but they're consistently profitable. And that operating margin? That's impressive for an automaker. It means Toyota is running a tight ship, they're controlling their costs, and they're squeezing every penny of profit they can out of every car they sell. But here's what I really like about Toyota. Their approach to electrification, they're not rushing headlong into EVs like some other automakers. They're taking a more measured approach, leveraging their expertise in hybrid technology while gradually expanding their EV offerings. This balanced approach makes sense for Toyota. They're not going to abandon their core customers who still want gas-powered cars. But they're also not going to be left behind in the transition to electric vehicles. Toyota is a company that's built to last. Finally, we have Johnson & Johnson, ticker symbol JNJ. Now this one might not be as exciting as Tesla or Apple, but sometimes boring is good, right? Especially when it comes to investing. Johnson & Johnson is a healthcare giant. They make everything from band-aids to cutting-edge pharmaceuticals. They're a household name, a global brand, and they've been around for over a century. That's the kind of stability you want in your portfolio. Here are the key metrics. Operating margin 26.5%, R&D investment $15 billion annually, consecutive years of dividend increases 61. Let's start with that operating margin. 26.5% is incredible for any company, let alone a healthcare giant like J&J. It shows they're incredibly efficient and profitable. And that R&D investment, $15 billion annually, that's more than many countries spend on their entire healthcare systems. J&J is constantly innovating, developing new drugs and medical devices. They're not just sitting on their laurels, they're investing in the future of healthcare. And then there's the dividend. 61 consecutive years of dividend increases. That's insane. It shows that J&J is committed to returning value to shareholders year after year, no matter what the economy is doing. J&J is a company that's built to weather any storm. They've got a diversified business, a strong balance sheet, and a long history of innovation and profitability. And there you have it. The top 5 stocks to buy in December 2024. From Tesla's leadership in clean energy to Johnson & Johnson's stability in healthcare, these stocks represent a balanced mix of growth, value, and income opportunities. Which of these stocks do you think has the most potential for growth? Or do you have a favorite pick we didn't mention? Let us know in the comments below. Don't forget to like this video, subscribe to The Viral Show, and hit the notification bell for more investment insights and trending news. Thanks for watching and see you in the next one.